If you struggle with market structure, this is the video for you. I'm going to cover external and internal so that you understand what you're looking at when you look at the charts. Stay tuned. Okay, so let's have a look at market structure, external and internal. So what are we talking about when we talk about external structure? That is your swing highs and swing lows. So if we start over on the left here, we've got a high that comes down to a low, that comes up to a high, that goes to a low, that goes to a high, that goes to a low, that goes to a high. So why have I marked these particular areas up? Well, these are your external swing points. So there's obviously lots of things happening in between. And if we draw legs down, so that's one leg, two legs, 3, 4, 5, 6, 7. They are our swing highs and lows. All of these corners or these points are our swing highs and lows. They are external structure and they are swing points. So what about internal structure? Well, for all of these straight legs that I've drawn, there's obviously lots and lots of this going on each of these legs. That is your internal structure. So if we zoom in a little bit here, let's take this leg here. What I'm zooming in now is to see is what is the internal structure. So obviously we've got a swing high and we've got a swing low and we've got an imaginary straight line running between them. But look at all of this in between it. Well, this is your internal structure. So if I just remove these drawings actually, just for a second, it'll probably make things a little bit clearer. Let's get rid of these ones here so we can actually see what we're doing. Okay. So I'm going to get the marker pen again. This low, put in this high. So until this low is broken, we aren't having any break of structure. There is no break of structure. So if we draw a line across there, it's only at this point here that low is broken. So that is now a lower high. So in effect, what the market has done, it's come down to there, and then we have broken this level. So we've now got an internal break of structure. Price action then comes up. Now, until we break below that low there, we haven't got a designated high. So once we break below this level here, we've now got another high. And it continues. This has come down, so we've now got a low here. We then come back up, but we haven't broken this low here. So until we close below that low, then that would then be a confirmed break of structure. We then come up to here, but we need to break below this low here, and we do just there. So that's now a confirmed lower high. So we've got external, which we've just seen, which is from here all the way down to there, but then within your external, you've got internal, and it's exactly the same rules that are applying for external, but it's done on a more micro level, a more zoomed in level. So our internal is from here to here because we broke below the low. We then broke below the low here, so when we come up, that's now our high that put in that low there. We then break this level here, so that's then the high that put in the low. We then break that low there, so that's the high that then broke the low. So this is our internal structure, and when we zoom out, all of that internal structure is on one external leg. So our external leg is from there down to there. All of these breaks of structure that we've just looked at happened within one external leg. You had a high there and a low there. So you've got one external leg and you've got lots of internal legs within the external leg. Hopefully that makes sense. That is external versus internal liquidity and, more importantly, market structure. Any questions, let me know and I'll gladly get back to you. Thanks for watching.